As an Indian, I think that we are now well within touching distance of a very cherished goal that I have, which is near universal financial inclusion. And I define that as every adult Indian having access to basic financial services, starting with a bank account, but not ending with that, and being able to do so from outlets other than branches. So the density of outlets and the accessibility of outlets is actually equally as important as the ability to open accounts and so on. Now, the 3 or 4 pieces for this are in place. For example, mobile telephones are now ubiquitous. More importantly, the GPRS signal is virtually ubiquitous in India. So you can, do transactions over the mobile network. Almost all banks are now 100% on the core banking software. So that again enables, once the message lands in the bank server, you can transact even in very small branches and small accounts. The universal, the unique ID, UID, is now covered already 400 million Indians, and 1 million are being added every day. So we'll get to near, maybe 1 billion in about 2 years' time. And finally, the consciousness among the financial regulators that inclusion is not just some demand of some activists, but that it's indeed good for the both for the economies of scale of the financial sector, as well as for other things such as financial stability and financial integrity. For example, there could be a systemic risk if you have a large number of people who are still transacting in the informal economy. So I think now there is a much greater consensus towards universal financial inclusion. So we're probably 5 years away from it. The field is still at a very, very early stage. We've so far just about touched on economies of scale. We've hardly explored economies of scope, which come out of distributing multiple products from the same outlets or using the same distribution channels, same sales force. And that's because most microfinance institutions so far have been largely focused on credit. Few have become deposit-taking institutions, and there are some microfinance banks, so they naturally offer savings. Insurance is beginning to appear in several places, but really speaking, there are relatively few institutions which offer 7, 8 products beyond just microcredit. Once that happens, I think we will see the second generation. And then there's a third generation I envisage, which is that ultimately finance is to improve livelihoods. And when there's a stronger integration of finance with livelihoods, which means, for example, not that microfinance institutions have to go and do livelihood promotion services, but they could devise products to finance livelihood promotion services. There's nothing sacrosanct about, say, an electric solar lamp, for which many microfinance institutions have products now, and say not about, say, getting an artificial insemination for a buffalo, or the capital expenditure for a liquid nitrogen cylinder, which is required to provide that. So that to me would be, the third generation of, and by that time I think they would have earned the sobriquet of being livelihood promotion institutions. And I think that's where we all are headed. The Reserve Bank of India is finally saying, do we have the right banking architecture for India? And the moment they ask the question like that, rather than ask, do we have enough banks? The whole the process can of exploration can begin. And there was a committee on financial sector reform led by Raghuram Rajan, who is now the chief economic advisor. I was a member of that, and more than 5 years ago, we had recommended something called small finance banks, where there's a cap on the loan size of ₹1,000,000. But other than that, they're full-fledged banks. And we think that there's a hole in India's banking architecture. It only provides for either very tiny cooperative banks or it provides for nationwide banks with very large equity investment, $100 million or more. So we need multi-tier banks, and we need multiplicity of functions among banks. I think all that will come. I am known widely as Mr. Livelihood Finance, but I am increasingly thinking that the one meta product which is missing is life cycle finance. And really speaking, we should think of human beings all the way from birth till death and have products and services which accompany them, So, for example, products for pregnant women who are poor and they need nutritional supplements or just better maternal care, to being able to afford institutional deliveries, to early childhood nutrition, to primary education, to secondary education, vocational training, self-employment if you want to start your own shop, etc., etc. Then consumer durable finance, housing finance, maybe a marriage loan, and all the way, and ending, unfortunately, with funeral or insurance, So now, if we see that, then of course within life cycle, livelihoods is important, because during the main period of working life, from about 20 to 60, people will be doing something, and they need help in that. But in some ways, livelihoods are increasingly getting housed inside enterprises, even if they're micro enterprises. And therefore, the issues there are also industry issues, sector issues, and so on. Whereas if you look at it from the life cycle point of view, the issues are entirely the person and the family, and maybe the community. So it's a whole new way of looking at it. Unfortunately, it's occurred to me only recently. So I hope there's some more work done on it.